Clifford, great to have you with us on the show. Thank you so much for joining us. Let's start with the dividend. Investors likely to focus on that. What reassurance can you give to shareholders that you'll be increasing the dividend at any point after keeping it unchanged in today's release?
Yeah, this year we've paid out 62% of profit. Our policy is 50% target and an additional amount depending on where we are on capital. So we paid for 2018 62%. That's up on 50% last year. The absolute amount is in line because last year we saw really strong profits as we sold a business. Going forward, we're making no commitments regarding dividends for 2019. It's extremely early. What I can say is we're well placed to consider additional distributions for 2019, and we'll clearly make decisions for the dividend at the end of the year, which is in about 1 year's time.
Okay, and that's fair. You know, we're at the start of the year. You've got to see how it all runs. We talk a lot about Germany on the cusp of recession, Italy slowing down, the core of Europe is under pressure. What are you seeing in the lending numbers in your business? Is there any slowdown?
Yeah, as you say, I think the European economy as a whole is slowing down somewhat over recent months. We operate primarily in the Netherlands, where sentiment remains positive. Our forecast for 2019 GDP growth is around 2% here in the Netherlands and still pretty strong after that. So sentiment here is good. In terms of our overall book of business, we're roughly flat. What we're doing is we're shrinking somewhat in the mortgage business, where market conditions are competitive. We're also refocusing in our corporate bank, where we're really focused on profitability rather than volume, and we're steadily growing profitably our commercial bank. So we're trading in this environment to ensure we make good returns on our loans and keeping the overall business roughly flat, which is good for capital generation, and in due course, possible distributions to shareholders, as you pointed out earlier.
Clifford, where do you expect the bank to grow this year in terms of the top line revenue?
Yeah, as I said, we expect the overall bank to be pretty flattish for this year. We gave some guidance in November last year at our Investor Day, where we said the overall book would be flattish, reflecting the trends I indicated earlier. We're still facing the headwinds of continuing low interest rates here in Europe, which is putting pressure on our deposit margin. So we're working hard to ensure our asset margins remain resilient, and we're working hard to keep our costs well controlled to ensure we deliver good returns overall, which is our primary goal. We have a target for return on equity at ABN AMRO of 10 to 13%, and in 2018 we delivered a little over 11%. So the bank's in good shape, and we've reconfirmed our guidance for 2019.
And just looking at your cost-to-income ratio there, comes in at 70.2. You've got a target of 68, so perhaps some work to do there. Look, the other big issue for the banks is really money laundering and trying to make sure that everything in the house is in good order. Are you finding it hard to find enough people to make that part of the bank fit for purpose?
Yeah, as you say, we're working hard on our client due diligence as our banks across Europe. We have about 1,000 people working on this currently in the business. That's about 5% of our staff. We announced a program today to further accelerate the work we're doing. That we booked 85 million of expenses, and that explains much of the dip in profits in Q4. We think that's very much a one-off event. And we're looking to scale up further, another 400 people. So we're committed to doing what we need to do to ensure we play the role as effective financial gatekeeper for society here. And we'll put the necessary resources in place to ensure that we do that.
Clifford, can I ask a final question on the government pledging to cut its stake in ABN AMRO to zero? Roughly estimated, when do you expect the state will have sold everything?
Yeah, look, I can't speculate on their trading strategy. They currently own 56%, so quite a big chunk. I think it's for the state to decide how they sell down, and we're clearly running the bank in the interests of all our shareholders and stakeholders, and we'll look to the state to decide when it wants to take its interest down.
Clifford, we're always up against the clock. We've got about 30 seconds. Deutsche Bank, Commerzbank coming together. The landscape is shifting. Is consolidation good news for Europe in banking?
Yeah, look, there's been a lot of speculation, which you referred to. There hasn't been much action. We feel we have scale in our core markets, so we're not all that interested in consolidation. What we're interested in doing is scaling our core businesses. And you saw last year that we bought a small private bank in Belgium, and that improves the scale of our private bank, particularly in Belgium. We'd like to see more of that for our business. In terms of bigger consolidation, I think I'd leave that to others right now to discuss the whys and wherefores. From our point of view, we're sticking to our business and ensuring that we serve all our stakeholders and deliver the profit numbers that we all expect.